right, we are now live. This is the unexpected protocol. Pretty much the reason for naming that is I look at it like people like myself and Dolly, we are the disruptors in the system. And for the most part, we were unexpected. So it's the unexpected protocol. We weren't invited to the party, but we're here nevertheless. And of course, we got you guys here. So we're gonna try to educate you to the best of our ability so you can understand what's going on. So there's a few standard definitions I wanted to get out the way before I actually get into some of the content. Some of this content is going to be very advanced, and I know, as Sarah said, that she might be a newbie to this. So learning these definitions will definitely help you to follow along. So the first one, this right here is some verbiage that is standard in pretty much every contract. They're all written this way. Sometimes the words are different. I took this and I had to change it out and put buyer because we're typically in a buyer position when we're buying cars or homes or things of that nature. So this is the language that you'll see. It says the buyer does hereby sell, pledge, transfer, assign, grant, set over, and convey to the assignee, its successors, and assigns all of the rights, title, and interest in the collateral property. And then I gave you a UCC. If you want to take that down, that is a very important UCC, which explains that when you sign a contract, or even like if you're doing a credit card application online, and you click to sign, it says click here to sign this document. That document then becomes a financial asset of yours that, as this language says, you pledge it to them. So I do have the definition of pledge. I want you to see how powerful pledging is. Let me make sure I got it right here. All right, right here. So a pledged asset, and which is a financial asset, actually. So a pledged asset is an asset that a borrower, so that would be considered you on the application, we're considered the borrower, uses as security for a loan. So hopefully many of us know what security is. I didn't take that definition down. I kind of assume most of us know what that means. But a security is something that is tradable. It is most times an intangible. It's basically used to be traded in the market. So it's worth money, it's valuable. So the borrower gives the lender a lien on the asset, which gives the lender the right to take possession of the asset if the borrower defaults on the loan. So here's the part that's tricky, and this took me a lot of years of studying this and looking over my own contracts and other people, is we're told the asset is the car. So it says it gives the lender a lien on the asset, which we believe the car, and the lender the right to take possession of the asset if the borrower defaults on the loan. The asset is in fact the contract or promissory note signed when you entered into a mortgage transaction for a home. So we're thinking the whole time they have the right to come and take possession of our home or car, when in fact it's possession of the asset, which is the promissory note or application in that sense. And they already have possession of it. So that's what completes the transaction. Is it's completed upon delivery. When we deliver the asset and it is accepted, it's not refused, it wasn't rejected. That accepted, and we know it was accepted because we get a statement every month showing that there is a deposit account and that there was an asset deposited into the account. So if the asset in question was the car or the home, how could they have possession of it? Because they perfect their security interest by possession. So they don't have the house, they don't have the car, we have it. So literally, this is how a transaction is complete. Once it's signed, once the note, which is an asset, is accepted, that's the end of the transaction. Of course, I'm not saying go call your servicer up and it's going to work just like that. But I'm just letting you know what happens um, on our side of the transaction. So I'm going to go back and let you know that the same note, the same financial asset that I'm just describing is actually the collateral, because a lot of loans is considered, especially a car loan or a home loan, is considered a secure transaction. So it means we gave up collateral in order, if we can't pay it or we default, they can actually repossess it or foreclose on it. So this is from the UCC definition, and this is what collateral means. Collateral means the property, and this is another word. Property, again, you think home, my house is the property. Property is your data, your intellectual data, or the asset. Again, as I said, the note is the property, subject to a security interest. So we grant them a security interest in the property, but the property is the collateral, and the collateral is the asset that I just spoke of. So it says the term includes a proceeds to which a security interest attached, because they use our notes as collateral and they receive an advance, which is considered proceeds. So it says accounts. So we do have an account. We get a statement every month. We know there's an account there. So that account is collateral. Chattel paper, again, which is any contract, a draft, a check, any negotiable instrument. Payment intangibles is considered what is called a what is that called again? Receivables. Account receivables is considered an intangible because it can exist in electronic form. It doesn't have to be physical where you can hold it. And it says, and promissory notes that have been sold. So this is one thing there's no confusion upon, because in your contract, it says we reserve the right to sell this contract and receive some of the financing charges. So there's no dispute to that. It says it right there in the contract. A lot of people say it's fraud. They sold our contract. They didn't tell us. They did tell you. So the fact that the promissory notes have been sold and they receive proceeds from it, and those proceeds were to be applied to our account as a credit. And it says, and goods that are the subject of a consignment. That makes a collateral. So the other word that I mentioned earlier is convey, that we convey in our contracts. So it says to transfer title, official ownership to real property or an interest in real property from one grantor to another grantee by written deed or an equivalent document, such as a judgment of distribution, which conveys real property from an estate. This is completed by recording the document with the county recorder or recorder of deeds. It only applies to real property. So when you see this, automatically you can see that they're speaking a trust transaction. There's a grantor and there's a grantee, and all records recorded with the county recorder are recorded in such a trust layout. There's always the grantor is a grantee. So this is where the title passes to, from natural person to natural person. It will never pass from like Synovio or some of these other entities that are saying that like they own the property and they have the right to take it back. It's always from Brian Williams to Samantha Smith is how title is passed. So go to a couple more. So this is a beautiful one. I learned this a while back when I was filing taxes as an Uber driver. And I had purchased my first brand new vehicle at the time. And I learned a lot. So usually I do TurboTax. Pretty much everybody just wants to get it over with, get their refund back as fast as possible. In this situation, someone informed me because I was doing Uber, I wasn't an employee. I was considered a contractor, and you have more write-offs in that position from your 1099 point of view, because it works backwards. When you're a 1099 contractor, you're most likely going to owe because you're probably not going to withhold enough. So at the end of the year, we're trying to fight off how much we're actually going to pay, whereas a W-2 employee usually saves up enough in withholding to where they can actually get an actual refund. So we're just trying to reduce the amount owed in taxes to the IRS. So with that, write-offs play a very big part of reducing your tax to zero or sometimes getting back a refund. So this is an interesting word I learned and I didn't really understand at the time. This is my first time hearing this word, but it's amortization. And amortization is basically you can take an asset and get a tax credit for the depreciation of the vehicle. So as you're making a payment on your house or your car, every time you make a payment, you can reduce your taxes by that amount of the payment all the way until the vehicle is paid off. You will literally get back every payment you make. And one of the beautiful things about this is just recently I was looking at this again and I started to understand it. Um, when you look at your statement and you make a payment and you'll see a positive balance, there's always a positive balance on your statement. So let's say you make a payment of 500. This is what happens. They keep the 500 and then they start subtracting a mirroring amount. So a matching amount from the balance you see on your statement and you see it get reduced and you get happy because you're getting closer to paying it off. And instead of realizing what is going on right in our face, they are using amortization on the asset, not the car, not the house, but the financial asset, which is the contract or the promissory note. So they're reducing it by the dollar amount. Every time you pay 500, they keep the 500 and subtract 500 from the asset account. So this is something I literally understood very recently. Like I said, whoa, this is what they're doing. Um, So it says amortization has different meanings for loan payments and taxes. Amortization for loans refers to separating the payments for the loan principal and interest into periodic payments to where the loan is paid off at a specified time. Amortization is used for mortgages, car loans, and other personal loans where individuals normally have a basic monthly payment for a certain amount of years. For tax and accounting purposes, amortization refers to the strategy of steadily writing off capital expenses a business incurs from an asset to match the revenues. And this is all what I was just speaking about. It's a matching number that reduces from the asset. The revenues the asset produces because the asset is producing revenue because, as I just said, you're sending in the 500. So that's revenue that's produced from that asset. And then they're subtracting a matching revenue from the balance. This has the effect of reducing the stated income of the business, which reduces its tax obligations. So this is why these servicers and lenders end up not paying taxes because it's reducing their tax obligation every time we send them a payment. So you have the direct method and you have an indirect method of accounting for amortization. So it says direct method plus the amortization charge or minus the amortization credit because there's a debit and a credit on both sides. Hopefully this is making sense to you guys. Let me go back over. Because I know I have you guys muted. I'm trying to just go over real quick, see if I can unmute. All right, but if you understand what I'm saying and you follow so far, just put a 1 in the chat for me. Oh, it seems like Sarah's mind's been blown. It says, wow, definitely. Okay. Anyone else understood what I was saying? Is it making sense? All right. I think most of the people are getting it because I'm about to step it up. If your mind is blown and you're loving what you're seeing so far, I'm about to get in really uh in depth. So it's going to get crazy. That's why I wanted to make sure that everyone really has a grasp of what I was saying right now. And let me just go back, make sure I didn't miss any definitions. So I had to pledge that. Oh, this was the one that's crazy. We got pledge. All right, I got all those. All right, so this right here, and this was something I remember just learning this information under under Jonah Bay. This is back when him and Yusuf L was actually a team. And he told us to pull out our constitutions and start reading them. He was like, the federal and your state, whatever state you in, start reading your constitutions. So of course, growing up, we've heard of the Constitution, we've heard of the Bill of Rights. We, know your rights, exercise your rights, but like I never read the Constitution. So I spent a lot of years in the beginning of my studies reading the Constitution and um and just kind of looking for remedy in it. But it's not until you start putting a lot of years of practicing and learning different things and come back and read it that things make sense. So Article 1, Section 10 of the Constitution states um, that the states are prohibited from emitting bills of credit. So one thing also that Jonah and Yusef taught us is to research words, pretty much look them up, because like we'll take this for face value and read what it says and be like, oh yeah, yeah, that's cool, cool, cool. But you have to get into a financial understanding of what you just read. So of course I had to look up the word emitting, because if you're thinking about it from a school point of view, I think emitting, we would think like something is emitting light or something like that. And that would be the wrong definition. So emitting in a financial point of view means uttering. So uttering means passing. That's what it meant. So emitting, so it means passing bills of credit. And a bill of credit, interestingly, is a promissory note issued by a government on its own credit and intended to circulate as money. Bills of credit are documents similar to banknotes issued by a government that represent a government's indebtedness to the holder. So just imagine if we're holding, and from what I read, and this right here too, it doesn't apply to Federal Reserve notes, but it applied to Federal Reserve, I think banknotes it was. I think it's right here. Yeah, the banknotes right there. Um, that they owe us when we're holding them, they owe us. So it says the Federal Reserve banknotes issued between 1915 and 1934 are bills of credit that are legal tender in the United States. Unfortunately, they're no longer in circulation. They don't make them anymore. There's no more banknotes, just Federal Reserve notes. Um, so what this is speaking of actually is most times when you're buying a house, especially if you're doing like a FHA or something like that, that is a federal loan. And that note that you're getting, that you're signing, and pretty much you'll see it like you owe the United States government or one of the government agencies. So that is a promissory note, that is a bill of credit, and it is prohibited by the Constitution of the United States, the same Constitution that gives force to the United States Corporation. That is their charter. So it's like right in your own charter, it tells you you can't do this, but you're doing it. You're issuing bills of credit on your bills of credit on your own credit. Um, so yeah, I found this interesting. I just found this recently, just kind of studying things. So I'm going to move forward, and this is where we're going to get really deep in the whatchamacallit, in the rabbit hole. So let me just find what I was looking for. All right, so this is one of them, and I definitely have another. There's another page that I want to get into, but we're gonna get into this one. Um, Man, you're probably gonna fall out your chair if you happen to be sitting down yet when you see this information. So we went over, collateral, and don't be afraid if you've earmarked or bookmarked these words to go back and look up later, so you can continue to get a fresh understanding of that word. So it just makes things fluid when you're reading through. You're going to understand everything you're reading. So let me change the share, and then I'm going to share a new screen with you. All right, here we go. All right, man, I got to take a deep breath on this one. This is it's about to get crazy for you. So, recognition of collateral. And I'm glad I've cleared up the misconception that our collateral is our cars for them to come get, mothers with babies and newborns that lost her car to a repossession, and now she's stuck and can't get to work and can't get the kids to school, daycare, none of that stuff. People who have lost their homes, and I see this in my travels. I see people that you can tell are good people. They're not completely homeless yet, like where they don't have a car and they have, dirty clothes and they stink, but they are living in their car, probably still holding a job with everything that they own to their name in their vehicles, packed in the front seat, back seat, just barely making it. So just because of lack of understanding that they don't know what the collateral is, the collateral wasn't their house for them to come and get. So I'm gonna get into it. So, U.S. transfers of financial assets guide. When a transfer of financial assets is accounted for as a secure borrowing, so I'm going to stop so I can break this down so it's crystal clear for you. So, as you can see, financial assets, which I just explained, every person who buys a car from a car dealership, they use two different contracts. One is called a purchase or buyer's order. And then the second contract that we sign is called it's usually RICS, I believe. It's a retail installment contract agreement. Typically on the agreement itself, it says retail installment vehicle contract. So they use all of these, that car dealership, and they will pool all their sales together. So if, let me see, they get 300 sales that month or that week, whatever, they're going to take all of them and sell them at discount. It's called note discounting. They're going to sell those in exchange. They're going to use them as collateral in exchange for an advance. So the note, basically the whole, say if you're buying, I don't know, a car that's $50,000. So that note is worth $50,000, but when they sell it, they won't get the whole entire 50. They'll probably get 40 or 45, depending on the rate that the factor is charging them. And that's what they're called. They're called factors. So in essence, they are borrowing money, not us. So they borrow that money so they can pay for the car, which they got the car on credit. So they didn't own it and they never paid for it, but they get it extended on credit. So that whole car lot gets filled up with shiny cars to use as bait. So it's basically a trap. The cars are the cheese, and we come running to the lot because we want, the cheese that they have on the lot. They look great. So this allows them to borrow money. So they'll pay back what was probably the wholesale price for the vehicle. It has a manufacturer sticker price on it for 50 something thousand, but after assembling that vehicle, it's probably, I don't know how to price. I don't know that breakdown on it, but it could be 8, 12, 15,000 or something like that, that car manufacturer wants for that finished vehicle. And then everything else is a markup. So they take the money. So say if you have 300 vehicles and 300 contracts, and all of them are like between 50, 70, and 100,000, look at the amount of money that they can borrow. So when you're looking at this, it says when they transfer, because remember, we transfer the financial asset to them, and then it's accounted for secured borrowing. Is they are the ones borrowing. It says the transferor continues to report the transfer assets on his balance sheet. So we don't have a balance sheet. That's I'm just making this really clear for you. Of course, when we go to these people, they say we're crazy and we're making this up and sovereign citizen, that doesn't make any sense. But you're reading this from people who have securities license and they understand this stuff. And we're reading it right here. So it transfer assets on his balance sheet, and it says ASC 86030 prescribes how to transfer financial assets, the non-cash collateral. See how I like the way that says? Non-cash collateral. How could a house or a car be a non-cash collateral? It says should be reported by each party. So the contracts aren't cash, but they're readily convertible to cash. So this is another word I want you to take down for yourself, even if you want to put it in the chat to remember. It's called conversion, because that's what happens when they take our instruments from us. They convert them. So because the characterization of the exchanges between transferor and transferee under secured borrowing model, so it's secured borrowing. The borrowing is secured by the notes, financial instruments, sometimes differs from its legal form, conversion. Applying the collateral recognition provisions in ASC 83060 can be challenging. This is particularly true regarding repurchase agreements and securities lending agreements. So a repurchase agreement is most times when they sell the notes, they sell them with the right to repurchase it at a sometime in the near future if they happen to need to come back in possession with that note. So the note is not sold irrevocably. So a repurchase agreement equals transferred securities. Once a note has been pooled, bundled, and sold, it is at that point securitized. It is sold to what's called a special purpose vehicle or a special purpose entity. And this is a funny thing. I was talking with one of my comrades online when we started to understand how the words are being tricked and used against us. But when you're reading a contract and it says vehicle, automatically the common person in society thinks their car or a car. Man, it's a vehicle. Okay, it's a car. But a vehicle, if you look up the definition, it's something that it's a mode of transportation, something that travels something from point A to point B. So it's not just something with wheels. A special purpose vehicle is literally just a pass-through entity that is used as an intermediary, that you can take those non-cash assets, put them into it, transfer out of it, and now it's a security. It's on the off-balance sheet. It is no longer on that car dealership's debt. It's now on their debt sheet. And that's what allows them to go out and get more credit, to get more shiny cars on the car lot to sell more, because the debt is no longer showing on their books. It is on a special purpose, and that way, a special purpose vehicle's balance sheet, which is called off balance sheet securitization. So go and read this. Legal purchase and sale. Transferee acquires legal ownership of each security, but is obligated to sell the security back to the transferor. Accounting characterization. Non-cash collateral pledged to secure transfers obligation to repay the borrowed cash. Now, see, this should be making more sense to you. So the non-cash collateral was pledged by us to secure the transferors. So the dealer's obligation to repay borrowed cash. They borrowed cash. We didn't borrow cash. We didn't receive a loan. So I don't know if I'm supposed to read in these columns up and down, but let's go here. It says cash received by transfer of securities. So that's again, it's speaking about the car dealership. They receive cash in exchange for their securities. Proceeds from a legal sale. It was a sale. Proceeds from a borrowing. So yes, they borrowed from us. Securities lending agreement. Securities transferred, loaned securities, including the right to transfer them to others, which is exactly what happened. And this is what is written in our contracts, that they can assign these contract and receive funding. So let's see, collateral securities lender is granted a security interest. So again, it's still speaking about them, and the collateral is not the car, it's not the house. Cash and or securities received by the securities lender. Proceeds from a borrowing. So remember we spoke about proceeds. Non-cash collateral transferred by the securities borrower continues to be reported on transferor's balance sheet. So let me go back to the chat, make sure I'm not ignoring anyone. Okay. All right, is everybody still following? I know this information, it can kind of be boring, but it depends if you have a tolerance for um understanding basically what's happening, because it can be boring, it can be overwhelming. It You won't pick this up overnight. This is something I think I started, some of my posts come up in my memories, and the stuff that I was posting back then, I think I just didn't understand it as good as I thought. But I was posting some heat back in 2014. So that's 10 years ago. Um, but yeah, as years kept going and kept going, sometimes I did have a misunderstanding of things. Even some of my YouTube videos, people ask a question, I'll go over to YouTube and respond to it and realize, oh, wait a minute, I got to correct you. That's no longer how I believe or think. I've evolved, and this is that. I'll kind of give them correct information. So, don't beat yourself up if this is something you don't get tonight or something like that. This is planting the seeds, and you definitely will grow. If you're diligent, you'll grow to understand this information. All right, so let me just read through, make sure, because there's some really good stuff on here. I recorded. So transfers of financial assets in exchange for cash collateral cannot be distinguished from borrowing cash. So it's letting you know it's the same thing. It can't be distinguished. You can't separate it. It is exactly the same exact thing. So they did receive cash for your promissory note for your home, whether it was 250,000, 980,000. It's the same as borrowing cash. So it says further, because cash is fungible, it is impossible to determine whether it has been used by the secured party. Accordingly, all cash collateral shall be recorded as an asset by the party receiving it. And see, it even lists them, secured party. So if it was an asset and I gave it to you to hold as collateral for the loan that I so-called received, then at the same time, you should be able to use that credit as a set off for the amount that they're saying you owe, because it secures them from taking any losses. Is basically what it does. So let me see. So together with a liability for the obligation to return it to the payer obligor whose asset is receivable. That would be us. We are the payer. It says with a liability, so that means they are owing for the obligation to return it to us, whose asset is a receivable. A receivable can be what is the word? It can be physical or inanimate. It doesn't have to be, something you can hold in your hand, but it is a receivable. So again, take that word down. You want to remember it, look up receivable. Also, what is that word? Receivables factoring. is another word. You'll look that up together, and again, your mind will be blown. You'll have that mind blown emoji. Um, Let me see from here. All right, so I even put those in the chat. Oh man, it went. All right, let me see. All right, so I put those in the chat. All right, so to get back to it, let me see. Cash collateral used, for example, in securities lending transactions. See paragraphs 860, 10, 5, 16 through 518 shall be de-recognized by the obligor and recognized by the secured party, not as collateral, but rather as proceeds of either a sale or a borrowing. So this is incredible stuff. Like it's just telling you right there. And this is stuff that is not public information. I know a lot of people are always saying like we should just be giving this away and like why are you gatekeeping it? But it's private information for a reason. Um, exactly. Now that I understand this in a full scope, before I used to say the same thing, like why y'all gatekeeping, why don't you just put it out there and share it so people can have it? But not realizing you will actually destroy the entire system. And although that might sound like a great thing, it's going to be a bad thing because a lot of people are going to suffer first, and then they're going to have to find a way to create a new system. And it's going to be a replenishing and repeating. It's not going to change anything to destroy this system. The best thing to do is to learn how to operate within it and understand, like a lot of people always say, the difference between public and private. So that's why, if you notice, I've never shared anything like this on my profile. So it's not just a matter of trying to like um, monetize it. It's just that this is pretty much what everyone does. A lot of people hold private seminars, private meetings, and teach this stuff. And that's why it's never out in the public. And that's why, you could have been living 30, 40, 60 years and you just now hearing about this today. It's because they really do understand protecting this information. So get back to it. Cash stand borrowing recognized. All right, so I read that one. So we're going to get into a little more of this. All right, let me see. So this would be a good one. Okay, just making sure the classified reported. So, all right, it says, how should a transfer measure transfer collateral that must be reclassified securities pledged to creditors? So it says ASC 860-30-25-5A requires transfer collateral that the secured party can sell or repledge to be reclassified and reported separately by the transferor. That guidance does not change the transferor's measurement of the collateral. Because the transferor continues to effectively control the collateral, it should not be derecognized and should be subject to the same measurement principles in effect prior to the transfer. For example, securities reclassified from the available for sale category to securities pledged to creditors should continue to be measured at fair value, with changes in fair value reported in other comprehensive income. Similarly, debt securities reclassified from the held to maturity category to securities pledged to creditors should continue to be measured at amortized cost. So it's the same thing that they're reducing it as you're paying more money in, which would go to investors, and you're paying the interest. So this is how they make the money back. Remember, I said they take the asset and it's called note discounting. So they're discount. They're not going to get the whole 50,000 on that loan. The loan is 50,000 for the vehicle. They're not going to see the 50. They may see 40, may see 35. But if you look at your interest, that's how they're going to determine it. Based off of what interest rate that they're paying for that advance, they will charge you on your side. So that's when you look at it and they'll say the cost this credit will cost you. You will see the principal balance that the car was being sold for, and then the amount for interest, and then they will add those two numbers together and say the total amount of this sale. So that's how all that works out. You end up paying back the amount that that note was discounted over the 3-year term, 5-year, 7-year, 8-year term, or 15 or 30 if it's a mortgage, whatever you agreed to. And that's what makes this so attractive for people to buy these assets. So it says, make sure I'm reading the right one. All right, how should a transferee, secured party, account for its obligation to return transferred collateral that has been sold? If a transferee, secured party sells collateral pledged to it, it should recognize the proceeds received and a corresponding obligation to return the collateral, as discussed in ASC 860 3025 5B. However, ASC 860 itself provides little guidance regarding the transferee's accounting for the obligation in subsequent periods. In lieu of such guidance, ASC 860 3035 3 states that the liability to return such collateral should be measured in accordance with other relevant accounting pronouncements. For example, a transferee bank or savings institution that has sold collateral is required to subsequently measure the related liability like a short sale at fair value. It says indicate that obligations incurred in short sales should be reported as liabilities and remeasured to fair value through the income statement at each reporting date. So let me see. This is something I wanted to show you guys. All right, yep. Still got it purpled out. So this is where I came up with that from. I went and looked this over a little while back, and I seen this because you're actually going to see your home loans and everything, your car loans here. So I'm going to scroll up so you can see that. Assets placed in service during, excuse me, I can't really, trying to highlight, I can't. But assets placed in service. So we talked about assets. Of course, hopefully everybody's following still the same assets. Placed in service during 2023 tax year using the general depreciation system. So even if you want to put that word in the chat and note that for yourself so you can understand what's going on. So this is where I realized it's applying to our car and home loans. Just as when the accountant did my taxes and he showed me how to depreciate my assets on my taxes, at that point, I didn't understand that our notes were assets too. We just literally think, our cars are assets, our houses are assets. But then I hear a lot of people speaking now that are always saying that a house isn't an asset. It's questionable. I don't know if I agree because they say sometimes it's an asset and a liability. But if it's an income producing asset that you have a liability to, then it's still an asset. It's just going to play on both columns. It's a liability to you at one point, but if it's producing cash flow, then it's an asset because it's going to pay off your liability and net you some positive cash flow. So if you've been looking at this already, classification of property. And again, when we speak of property, we're not talking about a house. Property is the same asset, which is the note. So imagine if you went in, you bought a car and you got a 3-year term on that note. It's right here. You can literally add these notes on here and the amount and the method and depreciation deduction. Deductions are beautiful. So you got the 3 year car loan, 5 years, 7 year. I don't know if there's 10 year, but I heard that they might be because cars are getting so expensive, they're going to go further out so that the your monthly premium will be affordable because cars have just increased in price so much. So you may be seeing those 10 year loans shortly. But everything else, when you see 15, 20, 25 year property, and then it even says residential, rental property, non-residential, real property. So these are the recovery periods: 25 years, 27.7 years, 27.5, 39 years. Um, these we're supposed to be filing on our notes. You're probably going to need, like, I mean, I don't want to get into that part too much. I don't really teach that because that's not something I've had personal success with. And I don't want to either mislead someone or give someone false hope. But I have experimented with it. I remember buying, or not even buying, just ordering packs of like 1099s from the IRS because they're free. You know, you can order them from the IRS. 1096s, get the 1040Vs. And a lot of people experiment with it. I hear it and see it along the internet, but yeah, I don't really get into, like I said, I don't have any success stories to share about that. But I just wanted to show you this form and how it coincides with everything. Um, so these are the same thing. And remember, type of property, list vehicles first. Um, I don't think we'd be using this portion of it for that. That's something, like I said, when I did my taxes for my car, you probably were right on those part. But when it's talking about property, we're talking about something different there. We're talking about those contracts are property. So certain property under section 179, maximum amount, total cost of section 179 property placed in service, threshold costs, before reduction and limitation. So this is what they do. Every time we send in a payment, they're depreciating it by that payment amount. So there's something else I wanted to show you. I'm trying to pull it up again. I think this is it. All right. Make sure. All right. So far, is any confusion? Um is everybody following along? Is it clear? Okay, Sarah, anybody else? Carla, Cynthia. How about you, Patrick? Cassandra? And you can type it in the chat. All right. Let me see. I'm still looking for. And I apologize. I always make fun of well, people are always saying that on Facebook, and I kind of comment and say how many pages I have open, but on my phone alone, I probably got like 400 something pages open at like any time. I don't even know how many are open on my computer. It's probably definitely a lot. Sometimes it tells me I'm out of memory. Yeah, I'm trying to look through most of these and find that page I was looking for. And did anyone needed a break? I know sometimes might have to go to the bathroom or something like that. Did anyone want to take a small recess? All right, one person, sure. Yeah, we'll just like take a, I guess we could take a quick 10 maybe, if that'll help. Anyone needs to run to the bathroom or check on a kid or anything like that. And that'll give me a few minutes to go and find these other notes I wanted to get to you guys.
Best educated, best equipped, best determined troops refused to fight. In fact, it's safe to say that they would rather switch than fight. Trained, best educated, best equipped, prepared troops refused to fight. Matter of fact, it's safe to say that they would rather switch than fight.
All right, is everyone back? You guys ready to get into some more info? All right, let's get into it. All right, I was able to find the pages I was looking for. So, all right, so this was a nice one I stumbled upon doing some research. Um, so this is the Security Interest and Personal Property Act of 2013. Um, And this is crazy because, like I said, we just been reading about this. We spoke about everything, how whenever we grant, convey, does it grant, convey, assign, or pledge security interest in our property, we're pledging them a security interest in our property. And that pledge of that security interest creates a lien upon real property, is what it says. And this is just me quoting it verbatim. Is I'm reading this stuff all the time, so it's like beautiful. I can really just discuss this stuff. But let's get into it. I'm probably going to skip through some of this because it's I'm saying it's a lot, but I want to get to the meat. Um, so it says, to what transactions does this act apply? Section 3, the act applies to every transaction that creates a security interest in personal property. So again, um, they trick and deceive us when they say that basically, like when they're trying to collect these debts, they're saying that this is for personal reasons or something. I forgot the reason, what it says, and not business. And in essence, it is business because the so-called lender or secured lender got a loan as a business, as an entity. So this was not personal property, but it was our personal property that we pledged that gave them a security interest in it. So meaning of security interest, section 2. Security interest means an interest created contractually relating one or more items of personal property. So all it takes is one, but it says and or more because they're speaking of the pooling of the personal property, which is also commingling, which is not permissible in banking. You should not commingle funds. That's kind of like if you have a bank account, Wells Fargo, and that's your personal account, and no one else should be authorized to be on that account. So, if all of a sudden Mike Miller was on your account with you, and you've seen him making transactions on your account, you'd be pretty pissed because that's commingling. So, if you pool a bunch of accounts together and then transfer them to a special purpose vehicle or entity, and now you have other people who you didn't particularly give an interest in dealing in your business and your contracts. So it says the property can be specifically or generically described and can be an interest that is present one or a future one. And the contract is designed to secure the fulfillment of one or more present or future obligations by the person giving the security interest. So I don't know why they didn't finish. Oh, it says just giving the security. I thought there'd be more. Um, all right. So meaning of personal property, and we're getting into that. Section 2, personal property includes goods, documents, which is important because that's what it says all about that paper, commercial paper, financial instruments, which is the same. Those are considered assets, account receivable. It's crazy. All these words mean the same thing, but they are just giving you insight. So when you see these words, you recognize them and you understand what is being discussed. And intellectual property, which I said earlier on in the webinar, was speaking about intellectual property and other kinds of intangibles. Doesn't need to be anything physical that you can hold. A lot of credit card agreements and contracts are they're just electronically held in a database. There was never a paper contract because we didn't sign one. We kind of clicked a box online and they were able to use that. So that's why when you're being sued by a credit card company for breach of contract, they never bring the contract. They always bring the a statement. The statement will be attached as an exhibit showing that you used it, because that you really don't have to sign it. Another way is by using the credit. So if they can show that you use the account, that means you agree to the terms of the account. So how is security interest created? Section 4, the non-possessory security interest may only be created by a written contract between the debtor and the secured creditor. So the contract must sufficiently describe the secured property in such a manner that enables it to be identified, and Section 2, possessory security interest, a security interest which under the terms of the security contract requires the debtor to give possession or control of the secured property to the secured creditor in order to secure the performance of the obligation concerned. So again, this is more, like I said, I'm not saying this is going to stop this, because I've been in a lot of court proceedings, like I said, either for myself or just witnessing it with other people. And they're always going to tell you that it's the car, it's the house, it's all that stuff, the boat, the motorcycle. And you're reading it right here. The terms of the security contract requires the debtor give possession. So when did we ever give them our car, our motorcycle, our boat, our house? We didn't. We gave them possession of the note. We signed it, gave it back to them. Or control of the secured property, which again, you know what property is. So in order to secure the performance of the obligation concerned, and that performance we want is for them to settle the obligation in our favor, which they never do. But being armed with this information is which the intent of this webinar is for, is to empower you, because now you have an understanding and you're no longer ignorant, and have unfair bargaining advantage in the contract. Now you are an informed contractor. You can come to a contract in a different way. It depends really who you're dealing with, because car dealerships are a little different. If you come in like this fully loaded, they're probably not going to sell you a car. And one thing I can admit, there's I ended up suing. I've sued a few car dealerships, but I sued this one car dealership. I put a lien on a UCC lien, not only on my own vehicle, but after they wouldn't bend to my will, I put a lien on the whole address and all property included in that address. And most people feel that this doesn't work, it doesn't do anything. I'm going to say it didn't do anything immediately, but I'd say a couple months. I don't know how, I wasn't paying attention to how this unfolded, but they ended up selling the brand or the name. I seen it go out of business, and then like this new business came up. It was still Honda though. So the Honda one, it left, and then it like changed names. It's probably, like I said, it's probably the same people, same company, but they had to change the name because the name had the lien on it and they couldn't do anything. So it does work. So, I'm not putting this out there to say, hey, go ahead and do that, because I don't want any blowback from that, but I'm just letting you know what I did and what was the terms of that. And also, I went to the new company there and tried to buy a car. After the salesman went back to try to get the paperwork, I guess, approved or looked at or whatever, the big ups upstairs remembered me and told him, and it was sad how they did it, because usually you can screen racism. So to avoid that, they had someone who looked like me come downstairs and tell me that unfortunately we don't want to do business with you. And they asked me to leave. So it's pretty much, and this is what it's called, blacklisted. So I've been blacklisted. I'm assuming only from that dealer, hopefully only from that dealer or dealership. But yeah, so that's what I'm saying. Don't go in fully loaded in the car lot, like saying like this and that, I know this, and you're gonna sell my note and blah blah blah. Like I said, especially if you want the car, I would try to do that after you get the car. Um, but Section 4, note the debtor's consent to give control must be in writing. So, and usually it is, like I said, the terms that are written standard into a contract or all contracts, we're giving all this. Like if you really read your contract with the understanding um, you're probably going to throw up a few times, understanding what you gave away in ignorance. So non-possessory security interest continued relates to the case where the debtor is not obliged to give possession or control of the secured property to the secured creditor in order to secure the performance of the obligation concerned. When is a security interest effective in relation to property, and what are the implications of this? Section 5. The security interest is effective in relation to secured property and can be enforced against the debtor and third parties when value is given, the debtor has rights in the secured property, which we do, or the power to transfer rights, which we do, in the secured property to a secured creditor, and either the debtor has signed a security contract, which we do, that describes the secured property, which I would say it improperly describes it to the house or the vehicle. It's going to put the VIN number, the color, the doors, and everything. So this is misleading. The secured property is in the possession of the secured creditor. So that's again how you know we're talking about the note and not the car, because the car isn't in the possession of the secured creditor and is a type that may be perfected by possession, or the secured property is in the control of the secured creditor and is of a type that may be perfected by control. What are the rights of the secured creditor under security contract? Section 5. Unless the debtor and the secured creditor agree otherwise, under the security contract, the attachment of the security interest in the secured property gives the secured creditor the right to proceeds of sale or other distribution of the secured property, even if the security contract says nothing about the proceeds. Now, this right here should have you real tight, because this is what's been going on. So it's just a matter of omitting things in our ignorance and them smiling, shaking hands. Can we get you a cappuccino from the lounge? Anything else? We gave you a free wash. We threw in some tents. Here's your keys. Oh man, congratulations. You know, again, like I said in the beginning of this, the cheese. You're so focused on the cheese, you don't see the trap. So it says the secured property is also attachments of a security interest and a supporting obligation for the secured property. A right to payment or performance secured by a security interest in personal property is also attachment of a security interest in the personal property. A right to payment or performance secured by a security interest in a mortgage and real property, or also attachment of a security interest in the mortgage. So this is another word you might want to look up, because again, when we hear it, we immediately think of a house. Mortgage is just it's a financial term, and it doesn't always have to do with a house. So look that one up and throw that one in the chat as well. A securities account, which is beautiful. This is what I love right here. A securities account is also attachment of a security interest and any rights or benefits derived from financial assets. See, they said it right there, credited to the security account. So I'm gonna highlight this again because we spoke about this. So I'm just gonna reiterate it because I want this to really drive home for you. So let me see, benefits derived from financial assets. Again, is the contract, or even like I said, if it's an intangible contract like the credit card agreement online, credited to the securities account. And you might be saying, Ali, how do we know if it's been credited to the securities account? If you receive a statement in the mail in all cap letters, then that financial asset has been credited to the securities account. The account, when they say like, give us your last 4, your social or your phone number so we can pull up your account, this is the account that they are speaking of. They're speaking of the securities account, and your statement is evidence that a financial asset was credited to the securities account. So let me just pull up the chat again, and I want to see, does everyone understand that? What I just said? Do you want me to like kind of break it down and repeat it? Or let me see if that you're answering me. All right, just looking at the activity and the chat. Yes, it does apply to school loans. There's a thing you helped me remind me. I'm gonna pull this up too because I want you guys to have a lot of value, so people can see, like, we have a small setting, which I like. It's not nothing for me to be ashamed of, but I think we can teach better in a smaller setting. But for those who didn't come, maybe they didn't think there would be value here. I want to give you guys so much that you're going to walk away, and hopefully, you'll give me and Dolly uh, some great reviews on our Facebook wall so that you know other people can just see that we're kind of different, like in a different class, like as far as when it comes to our experience, our knowledge, and most of our knowledge just comes from my personal experience. Dolly's been doing this probably since 2012. Me personally, since probably before that, before 2014 for me, but I've been beating traffic cases back in, I don't even remember, early 2000s, stuff like that. I've been fighting a lot of things a lot in my life. I said just repeat or break it down again, Jamaica. Um, all right, break it down more. Not sure what the security account is. That strong account, everything. Okay. So basically, what I was saying, the securities account, if you have a statement from anyone, like once what we call a bill, we call a bill or a statement. That statement is proof of a asset, financial asset, being credited to a securities account. And I know I'm gonna see if I can find the photo. Should be, I think it's in my favorites. And this was typically I did see someone who posted something similar to this, and they were able to get it without going to court. But I got mine's through litigation, and through discovery, they actually filed this into the case. And again, like I said, it went over my head initially because you're so overwhelmed fighting this case that you don't see this stuff initially, and you go back and start looking at stuff and studying it, and you look at what they gave you, and you be like, wow, they wasn't even afraid to put this in this case. It's right here. I'm looking dead at it, like with all four eyes. Like, well, in my case, five. Got the pineal gland on the globe, but um, let me see if I could find this because I think it's in my favorites. Um, can't really find it. Let me go back this way. Nope. All right, I don't see it real quick. All right, but we'll keep going. We'll break it down again. So, a securities count is also an attachment of a security interest and any rights or benefits derived from financial assets credited to the securities account. So let me see. But this is a um. So I'm actually going to pull up the UCC definition of financial asset. If someone can actually remind me once I'm finished reading all of this, in case I forget, and I'm going to pull up the UCC definition of that, and I'll share that with you. So from derived from financial assets, credited. That's the most important part. Credited, because that positive balance that we've been discussing lately, not here on the webinar, but just in the space overall, I've heard a lot of people discussing that it was credited, and a lot of us have proof of it. We can see where the accounting first starts in a ledger, and it starts with them depositing the amount, which was the selling or conversion of the financial asset, was credited to the securities account. Because remember, it was moved off the dealership or mortgage brokers books onto a special purpose vehicle, and it was converted. So that's the conversion, and that creates a securities account. It's usually held in trust, And that's where in the beginning we were talking about grantor and grantee. Because when it comes to mortgages, not even just mortgages, but anything that is recorded in the recorder's deeds is in trust format. It's always grantor, grantee. It's how it's recorded. It's just a thing. Even when, sometimes I get receipts for things. I get copies of things printed or certified copies or something, and it's always they'll ask for a name, and it will have grantor or grantee. So let me see. Maybe it might get a little better in explaining it here as well. What are the obligations of secured creditor where it has retains possession of the secured property? So again, it's still speaking about that right there. When they have possession of it, can't be the house. You know, I'm still reiterating, it can't be the house. It's not the motorcycle you bought on credit. It's not the boat. It's not any of that stuff. Because how can they retain possession of it while you're living in it or driving in it? They can't. Section 7. A secured creditor who retains possession of the secured property must exercise reasonable care in the custody and preservation of the property, must maintain the property in such a way that it remains identifiable unless it is perishable. Look at that. It's telling you, may use the property only as agreed by the parties to the security contract. And that's the part where I was saying here above that once you read through your contracts and can understand what is being said and what you gave away unknowingly, I don't think if you knew what you were doing, you wouldn't have still contracted that way. Um, but yeah, you agreed to them having a lot of access to your property. Um, let me see. I will try to answer that. Oh, actually, it's called the what is it? Security Interest in Real Property Act of 2013 is how you can access that, Sarah. And it's going to be in the replay as well. You'll see it, but the title was on top. Thank you. I'm paraphrasing, but it should come up anyway when you search it that way. How, why and how is the security interest perfected? Section 8. A right given in a security interest is enforceable against third parties only when the security interest is perfected. The security interest is perfected when the security interest is attached and the security interest is registered at the secured interest registry and the secured creditor or his agent has possession or control of the secured property. So that's why I love it. They keep saying it over and over. Possession or control. Perfection of security in an account. The debtor, secured creditor, and the financial institution agree in writing that the financial institution will comply with the instructions of the secured creditor. If the secured creditor becomes a customer with respect to the relevant account, so why did it just kind of started reading and stopped? I guess that was like the end of it. So if the secured creditor becomes a customer with respect to the relevant account, I thought there was more. So I guess that was like, um, says crops. The security interest can exist even when there are seeds growing in the ground and whether the crops are cut, picked, separated from soil, and whether they are stored on land where the crops were grown or any other land or premises. The sale, lease, or mortgage or other encumbrance of the land on which crops are grown does not prejudice a perfected security interest in the crops. A perfected security in crops has priority over a conflicting interest of an owner, mortgagee, or other person with an interest in the real property if the debtor has a registered interest in or is in possession of the real property. I'm not sure why they put that in there. Because I mean, it does probably tie to like stuff like mineral rights in the ground that someone has a house property on. And from what I've heard, it doesn't extend to any minerals or oil or anything that may be produced from the land. So it says, what are the rights and obligations of a debtor who retains possession of the secured property? This is the non-possessory security interest where the debtor retains possession of the secured property. He has the obligation to use and dispose of the property and any proceeds from the property in the ordinary course of his business. Must discontinue the exercise of those rights if the secured creditor gives notice of his intention to enforce his security. Must do whatever is reasonably necessary to prevent damage to or loss of the property. Must allow the secured creditor to inspect the property to verify its quality, or the state of its conservation. Section 19, motor vehicles. So now they're specifically speaking of these things of motor vehicles. So a buyer or lessee of a motor vehicle takes the motor vehicle free of any security interest perfected by registration if the buyer bought or the lessee leased the motor vehicle without knowledge of the security interest. If the motor vehicle is not correctly described by serial number in the registration of the registration notice. Section 22, a perfected security has priority over an unperfected security interest in the same property. Priority between unperfected security interests in the same secured property is ranked by the order and time at which the security interest attaches, with the earliest in time taking first priority, which is considered a senior lien, or also an inventory. It's FIFO. It's first in, was it first in, last out? So priorities of continuously perfected security interests in the same secured property will be based in the order of that first registration or possession, or that the security is temporarily perfected. Section 23, purchase money security interest has priority over non-purchase money security interest in the same property. Enforcement of security interest where there is default of the debtor. Section 34, where the debtor defaults on the security contract, the secured creditor can exercise its rights under the security contract to take possession of the secured property and any right he might have under this act in respect of crops or accessions. Where the secured creditor is in possession of secured property, he can exercise the rights he has being in such possession. Section 35, where the secured property is an intangible or a financial instrument, he must notify the debtor or any person obligated to make payment under the financial instrument to make the payment or perform whatever obligation the debtor had agreed to perform under the security contract. The secured creditor may also take control of any proceeds of any sale or disposal of the secured property to which he is entitled. So this is where our entitlement comes into, because most times, and someone made a post earlier and I saw this, is that what did they say? It said that when they auction off your vehicle, they do apply the amount that the car was sold for, but I think they said sometimes they're still listing the same amount owing. The same amount owing. Like they'll say, like if you owe 10,000 before they repossessed the car, and now they sold it, and what did they say? They got 10,000. It was something that they were saying, but a lot of these things, like they'll get money from like Gap insurance. You might have purchased Gap insurance on the policy. You're entitled to the refund of that, of the unused portion. Same with the finance interest charges. You're entitled to any unearned portion of it. So if your car got repoed and you still had years to go on that contract, they didn't earn the rest of the interest. They earn their interest daily. Interest accrues daily. So there are so many ways that they still owe you more money and they actually keep it and they don't apply it to reduce the debt. So the secured creditor can apply the money or any accounts receivable to it says to satisfy the payment. Yeah, the secured creditor can apply the money or any accounts receivable. And this is the most important part. And like I said, because of our ignorance, the accounts receivable is the same things they've been talking about: the financial instrument, the financial asset, the contract. I'll put it in simpler terms: the contract, all these things, that is the accounts receivable. It says whether it's tangible or intangible, or security, which is the same thing. That asset is called security. So these are just different words that saying the same thing. I guess sometimes they made to confuse you. But I'm here to give you clarity. I'm going to say they're sitting here saying the same exact thing. And to satisfy the payment or obligation, because, and these are the same thing. It almost seems like when they say or, it just seems like it just says and or includes, because it's the same thing. Owed to him by the debtor and can deduct reasonable expenses from these proceeds for the collection of that debt or obligation. Um, and again, so there's the funny part. It never mentioned the car or the house. It said accounts receivable or security to satisfy the payment obligation. And let me see. And there's the word proceeds again. How a secured creditor can dispose of secured property in satisfaction of the debt or obligation owed. After repossessing or seizing the secured property, so they got the word repossessing in there, and immediately when we hear that word, it's like a light bulb going off in our head, and we say, oh my God, you look out the window to see if the car is still there. But again, as I keep reiterating, I'm just doing this for a point, for learning. Our muscles have memory. So the more you do see or hear something, it becomes a muscle memory. You don't even have to think it anymore. You're going to disassociate car when you hear the word repossessing, and you're going to replace that with the contract, the securities account, the financial asset, all those words. You're going to replace it with that. They should be repossessing it. But the thing is, they already have possession of it, which is something we've been discussing this whole time. They already have it. So, and repossession is just to throw you off. Like I said, you end up locking your car up, or you got like 3 pit bulls around your car to make sure ain't nobody stealing it in the middle of the night. But it says the secured creditor must give at least 7 days notice to the debtor or any other person who is known to be the owner of the property that they intend to dispose of the property, and to other persons who has an interest in the secured property which is subordinate to the secured creditor. So they got to give you 7 days notice, which they never do, because I'm kind of double speaking here, because we know it should be the asset or the paper, and it's not. It's actually, they're talking about the car. But how many people have gotten 7 days notice? And where's, I think it said prior. So 7 days notice. Yeah, it does say prior, but yeah, at least 7 days notice to the debtor. Um, it would, but this system is built so incredible that there is no private right of action for us to bring a securities fraud claim. This must be bought by the Secretary of the SEC, or I think it's the FTC, are the only people who are empowered to make claims on behalf of private citizens. Private citizens don't have a right of action. So you'll end up in one of those situations where it's what's the word they always get us out of court with? Failure to state a claim, for which relief can be, and as you can see, I know this stuff like verbatim. I'm trying to paraphrase it. For which relief can be granted. That's what you'll get hit with, because to make a securities fraud claim, you would have to make that in federal court, which is the district court in your area, like wherever your address is. Some states actually have 3 or 4 different district courts. Like Florida, we're pretty big, so you have Southern, you have Middle, I think it's Northern district. So there's different district courts, but some states are pretty small and there's only like one there. But yeah, you would make that in your district court, which is your federal court. It's confusing because it's in the state. You're like, wait a minute, how is it in the state and it's federal? But yeah, it's federal jurisdiction. So that's where you would make those claims. But again, most of those are made in class action, and they're brought by the Attorney General or the Secretary of um, Securities and Exchange Commission. So let's see, who is known to be the owner of the property? All right, so I read that. The disposition can be by private sale or public auction. Now, this is crazy because, again, hearing this, you're thinking about the car and the house, but this is how the financial asset was actually sold too. But we don't know about that part, and we didn't know that exists, so we don't correlate it with that. Let's see if it says, oh, you found it. All right. So it can be of the whole property or in commercial units or parts. So look at that, it still got you thinking about house. But again, when they say commercial units or parts, it's speaking about pools of financial assets or individually. It can also be by lease, credit sale, license, or other reasonable commercial way. Debtor may redeem the secured property from the security interest. So this is the part I think a lot of you have been asking about or interested in. So make sure we're listening up. So this is section 41. At any time before a secured creditor has disposed of the secured property or entered into a contract for the disposition of the secured property or has elected to retain the secured property, the debtor may fulfill the obligation secured under the contract and pay the expenses of secured creditor in respect of seizing, repossessing, holding, or repairing, etc., the secured property. So again, they have those words in there to mislead you that they're talking about car, let me see, repossessions, repairing, and the word seizing. It is already in their possession because possession was perfected by delivery. So this stuff is misleading and throws you off. So let's see. Registration of secure interest. The establishment of secure interest registry and a registrar of security interest. Registered to be electronic form, availability for inspection by the public. Search data includes name of debtor, registration number assigned at registration, and will relate to all notices thereafter. Motor vehicle serial number identification of fixtures, including the volume and folio of land where affixed. Absolutely, Sarah. Length of time, the registrar will retain notices, period of time debt or obligation remains outstanding. And so these are just, oh, so that passing of this act repealed these legislations, the Agricultural Loans Act, Bill of Sale Act, which I want to read. Actually, I haven't read this one. Debenture Registration Act, amended legislation, Agricultural Credit Board Act, Companies Act, Farm Loans Act, Hire Purchase Act, Trademarks Act and Trademark Rules 2001, Workmen's Compensation Act, and thank you. So I did promise you that, and I did actually remember. I'm gonna go to this for you real quick. And it's crazy. Most of this stuff is bookmarked because I'm always reading this stuff. But this is what we was talking about, and I think that was you, Sarah, that was saying something about the securities counter or what is it. So literally, as we were reading that, and I see that a lot in contracts, they will take just the verbiage from the UCC, but they won't give you the code. So securities account means an account to which a financial asset is or may be credited in accordance with an agreement. As you remember, we just read that verbatim. under which the person maintaining the account undertakes to treat the person for whom the account is maintained as entitled to exercise the rights that comprise of the financial asset, except as otherwise provided in subsection D and E. A person acquires a security entitlement if a securities intermediary. So see how I was setting you up in the beginning. I mentioned all these things in intermediary. I didn't mention entitlement, but I mentioned what an intermediary was. So indicates by book entry that a financial asset has been credited to the person's security account. Look at that. Receives a financial asset from the person or acquires a financial asset for the person, and in either case accepts it for credit to the person's security account. Remember I said accepts delivery? When you signed at that car dealership or with the mortgage broker and you seen them take it, and with the mortgage, he has to fold it up and put it, well, it depends how they ask for it to be delivered. Sometimes they fold it up, it goes in like a FedEx, DHL, overnight it back to them. Other times, it'll be signed all through like DocuSign or something like that, and they have a certain instructions of how that package is to be returned. So it's accepted right there, and when they the person receives it, because the broker is just the middle person. He's just getting these papers handled for an entity that chooses to I guess not be in the room with you. um so we get a little confused. We think, there's the person he's handling, he's doing big things. No, he's just there cutting a commission out of this and keeping you in the dark. So becomes obligated under other law, regulation, or rule to credit a financial asset to the person's security account. And that's why I wish I could find this, because I want to show you. I'm not sure if some of you have seen this online. I've seen a few people posting them now where you get the ledger from them, and it starts off with the amount you owe, and next to it it said I think it said loan or advance received, and then it said something about receivables, loan receivables, or something like that. But it is literally, so those words won't be so strange for you. And when you're seeing them now and you look, you can recognize and you understand what is occurring and going on. So if a condition of subsection B has been met, a person has a security entitlement, even though the securities intermediary does not itself hold the financial asset. So, and the only time this would be applicable is, like I said, they when they get it, they basically, how you say it, use it as collateral, and then they give it over to someone else. That's the only time they would not hold it. If a securities intermediary holds a financial asset for another person, and the financial asset is registered in the name of, payable to the order of, or specifically endorsed to the other person, and has not been endorsed to the securities intermediary or in blank, the other person is treated as holding the financial asset directly rather than as having a security entitlement with respect to the financial asset. So these are very important things. Let me see. So where it says has not been endorsed to the securities intermediary or in blank, those are very dangerous positions, and this is why you'll end up having to pay on the account for 3, 5, 7, 8 years, 15 years, 30 years. This is why, because you gave it in blank, or it has not been endorsed to the securities intermediary, where it says, where was it right here? Payable to the order of. These are the magic words. Payable to the order of, and it says has not been endorsed to the securities intermediary. So that's why I love finding out who the securities intermediary is in the transaction, because now I'm going to not give it in blank. I'm going to either restrict it or I forgot the other word. Mine's drawn a blank for a minute, but the other word is I can't think of it, but it's definitely restricted. I forgot the other word. I'm quite sure Dolly probably knows what it is. Um, but this is how you eliminate the debt in its entirely right from the beginning. Again, you can't be scared with this. You have to be strong and stand firm. Um, and they will try different ways to scare you into just um can't say scare you into doing things that serves against your interests. And they'll say things like, we're gonna call the cops or blah 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 blah. And a lot of times those are just false promises. They usually never do. They will find some way to steal that asset back from you and keep the financial asset. That's what I hate is when they take both. So they already sold the asset, the financial asset, but then they take the car, the house, and sell that too, and then keep that money. And then it says E, issuance of a security is not establishment of a security entitlement. So I know there's a few words I passed over that you guys want to see. So I'm gonna click this one, financial asset. Except as otherwise provided in section 8103 means a security. So, I see a lot of people talking here. And this is stuff we read a long time ago, but not saying the information has changed, but we get a better understanding. So it says most people believe that a security is anything with a maturity 9 months or more. But that's not what this says. It says financial security, I mean, a financial asset is a security with no limitation of time. And it says an obligation of a person or a share, participation, or other interest in a person or in property or an enterprise of a person which is or is of a type dealt in or traded on financial markets. So financial assets are traded on the secondary market, and that's when they're sold, or which is recognized in any area in which it is issued or dealt in as a medium for investment. So it is literally investment grade paper, is what it is considered. So just to take a look at Cassandra's question, kind of a tangent here, but I just got a new credit card. It doesn't require an authorized signature on the back from US Bank. So that was so strange. I thought the authorized signature was necessary on the back. On the back of the card itself, I think you did it right there. I just want clarity though. Because this was an argument I've been dying to use in court because it says that we are not responsible for the account if it is not signed on the back. And I've been looking forever to find case law because I'm like, you're bringing in this statement and saying we used it and now we're here to pay and we made demand for payment and they have not to make payment. So we're suing them for breach. And I wanted to enter that card into evidence, but like, wait a minute, this ain't signed. Because technically, and some merchants do it. They won't let you use it. They will ask for you to sign the card first before you can use it, especially with a credit card. um, so let me just read it, just that again. So it doesn't require. Yeah, that's odd if their language is saying that because I think most of the cards always say that, not authorized if not signed. So I think it's more on the merchant. The merchant isn't supposed to allow you to use it. Says, can we enter into personal trust management with banks as trustee using my security interest to transfer into new account, which is a securities account, the same bank. I think I kind of understand some of what you're saying. Yes, you can, how is that called? It's called changing the control of the account. And yes, you can take you said that into a personal trust management or things. I'm not exactly sure how you're meaning because I know some people are speaking like our estate is a trust. I don't know if you're speaking like that or you're saying you have a trust account with the bank and you want to transfer using security interest to transfer into a new account. Um, I don't know. It's a little confusing. I kind of need more clarity on which way you mean it because I know some people when they say trust, they're talking about their estate, and when banks are talking about trust, they're talking about you have trust documents drafted and an EIN number for a trust. So to get back to it, let me see financial instrument. any property that is held by a securities intermediary for another person. So that's clearly you. It's held by a securities intermediary for another person in a securities account. If the securities intermediary has expressly agreed with the other person that the property is to be treated as a financial asset under this article. As context requires, the term means either the full interest itself or the means by which a person's claim to it is evidenced. So you definitely have to make a claim to it. So it has to be evidence, including a certificated or uncertificated security, a security certificate, or a security entitlement. Definition. All right, so security. Uh, that's a very good one. So security entitlement means the rights and property interests of an entitlement holder with respect to a financial instrument. So then we'll go, wait a minute. So entitlement holder. There we go. So I'll read that and entitlement order. So entitlement holder means a person identified in the records of a security intermediary as a person having a security entitlement against the securities intermediary. So we have a security entitlement against them. If a person acquires a security entitlement by virtue of section 8501B2 or 3, that person is the entitlement holder. Said on my phone, great work. Thanks, appreciate it. Let me see. All right, so you got an entitlement order, and this is where I know a lot of you are saying, like you said, make a claim. Like, how do we make that claim? So this part is for you. So an entitlement order means a notification communicated to a securities intermediary directing transfer or redemption. So beautiful word. It could either be transfer, but I like redemption. So you're redeeming it. The word redemption means redeem of a financial asset to which the entitlement holder has a security entitlement. So you are the entitlement holder and you have a security entitlement. I think I read that one. Let me just click again for you. Yeah, we just read that one, which is a very small definition. And I don't even know if it gives you clarity, but it means the rights and property interests. So of course we have an interest in the property and we have rights to make claims to it. So I think what was the other one? Let's go back. Because there's some more. All right, let me see. All right, all right. So literally, if there's a part of the UCC that you want to study, it would be right here. It would be from 8501 to 8511. This, because I know you'll have questions and a lot of people like to ask, which shouldn't be anything wrong with it. But sometimes I get frustrated because people don't look, or if they do look, like, oh, I'll give you this and you don't read, you'll still have questions. But the only way I can answer your questions is by telling you what is right here. That's why I just say read it. But this is it. I'm giving you the source. It's 8501 to 8511. You can just look here with most of the titles of what it's saying. Duties of securities intermediary to maintain financial asset. These were the same things I read on that page, that blue thing that looked like a PowerPoint slide. All of this was there without the numbers. So let me see where it tells you they have to listen to you. Purchases. All right, so it's right here. And it remember I read that duties of securities intermediary to maintain financial asset, but with respect to payments, duties of securities intermediary to exercise rights, and we spoke about rights, and I think it said property something. It said as directed by entitlement holder. You are the entitlement holder. So comply with entitlement order. And this is the one that's really affecting us. Let me just click on this one, specification of the statute. It's on studies. All right, so this is the one, because the way we are titled on our accounts doesn't have us in the position to do what we need to do or want to do. So this is it right here. It's 508. Duties of securities intermediary to change entitlement holder's position to other form of security holding. They need to switch you back because remember, they did a conversion on the account. So a securities intermediary shall act at the direction of, look how powerful you are. This is like, excuse me, this is like Dorothy going to the good witch, and she told her that you had the power all along. Because we're coming from a stance or a perspective that we are not all powerful. So we kind of, please guys, or can you do this, or why are you doing this? Instead of giving direction, making claims, giving directions, powerful words to give you power. Again, sometimes you do have to be a little stern or assertive, but for the most part, never be belligerent. You will most likely never get your way being belligerent. I can see you, because I've experienced this myself personally. I can be a hothead, but I had to learn, even though you're mad at these people, and most times it's not the person that's in front of you that you're yelling at that's making, I don't know, 14, 20. I'm not trying to diminish anyone's whatever they earn, but I'm just saying this person doesn't make enough money to understand what you are yelling at them and why you're upset about. So I had to learn that. It's somebody behind the curtain that you're mad at that is probably off on a yacht smoking cigars, teeing off on the front of his yacht that you are pissed at. And you will probably never be face to face with that person. So keep that in mind. Don't be belligerent, be assertive, but be respectful, and you'll get a lot further. So it says to change the security entitlement into another available form of holding for which the entitlement holder is eligible. Look at that right there. It is eligible, or to cause the financial asset to be transferred to a securities account of the entitlement holder with another securities intermediary. A securities intermediary satisfies the duty if the securities intermediary acts as agreed upon by the entitlement holder and the securities intermediary, or in the absence of agreement, with securities intermediary exercises due care in accordance with reasonable commercial standards to follow the direction of the entitlement holder, which is you. Yep. I wouldn't even say possibly Jamaica. I would say, yes, I left that part out. You definitely want to endorse that way. Says endorsement is early thinking of. No, I said restricted endorsement. I forgot the other one I was trying to say. Again, I got so much information there. Sometimes some of it escapes me. But yeah, I definitely wanted to give you, and that was in one of my older videos on YouTube as well. I found that, and I went crazy. I was like, why is everybody talking about Article 3 and Article 9? I'm like, how'd y'all skip over 8? You guys didn't see this? But this is another one I wanted to get into. So this is collateralized debt obligation, CDOs. So that's what that's called when we were talking about a pool of loans. They're collateralized when they use those pool of loans as collateral to obtain a cash advance. So one thing that I learned about this, because again, like, I'm very I try things, like I'll learn something and I get on phones and I start Googling addresses and certain people's positions, or I'll get one of their filings from SEC and just look, and it'll have everybody. It'll say VP, CFO, all these different people positions. And so I'm calling and asking for names specifically, or it'll have their exact number or email address. Um, but one thing I learned is that they don't sell pools of loans to just everyday people like me and you. You can't get up there and just buy one loan. They're really only going to sell them in pools. It's very rare that they're going to break one out and be like, oh, you want, Sarah Green's loan. And oh, how much is it? And you look at the debt and like they'll sell it. They're not into business like that. They're moving big volume and pools of loans. And usually government entities do this. And financial institutions definitely deal in this type of paper daily. So we're going to read through this a little bit, try to get this a little bigger for you, especially for the recording. So a collateralized debt obligation is a complex structured finance product that is backed by a pool of loans and other assets and sold to institutional investors. So that's like I said, I've been reading this so much. A lot of this stuff is just verbatim, um and it helps a lot because I can defend myself in a courtroom, whether a lawyer's there. Most times he or she is not even as prepared. They may need a continuance, or they may lose that argument with me right there, because I know that if the counter questions to ask and certain things that I ask in that moment, an attorney can't answer. The reason why is because it would be hearsay. He or she would need to have someone from that institution standing beside them. Um, and I can't even say whispering it to them because it's still hearsay. It must be entered into the record either in the form of an affidavit, a sworn testimony, or by deposition, where that person takes the stand and goes under oath and gives testimony. So that's the only way. Um, so yeah, a CDO is a particular type of derivative because, as its name implies, its value is derived from another underlying asset. These assets become the collateral of or if the loan defaults. And that's the beautiful thing, is just that one sentence is so powerful when, you know, trying to bend your mind to getting remedy. That's what I'm doing here. I know some people might not have came or whatever because they like, well, if he ain't gonna tell me how to get out of my loan, I don't want to come. Um, but the one thing I want to say, and this is not even me, like giving a big thing to myself, like patting myself on the back, but the thing I realized that I could do, it's not about me saving the world. Sometimes it's just about you need someone strong enough to step up and watch the world save themselves. So a lot of things that I planted seeds in some of my older videos, like 3, 4 years ago, and I even said this in some of the videos that, people ask me questions, okay, well, how do we do that? Or does this work or something like that? And I would plant the seeds and, full circle. I've seen people went and dug further and found proof of the things I was talking about 4 years ago and getting remedy. There's a lot of people out there, of course, I'm not going to mention names, but a lot of people are doing things with the info that I brought to light. And not saying it was new info when I brought it to light, but I'm just saying sometimes I put information into the space where other people can get a hold of it and they do magic things with it. So that's a beautiful thing. Um, but yeah, these assets become the collateral if the loan defaults. That sentence in itself is so powerful in getting remedy because it proves again, how could they use the car, the house as collateral for the loan if the loan defaults? It's not. It's the contract all the time. And I gave you a couple different ways of saying the contract, because if you notice, since we've been reading this, it hasn't said the contract, but it's called it a bunch of different things. Hopefully you've taken note, and it will help you when you're reviewing the replay um, of studying this. Get this over and over. play it while you're around the house, you're cooking, getting dressed for work, anything. Listen to it. Put it on something where you can listen in the car and just listen as you drive to work or wherever you're going. Or if you drive for a living, even better, you're a trucker, listen to it. And you will get it right to the point where I got, like I said, you can spit this stuff verbatim. And that's how you need to be. Because you may get on the phone with somebody who's capable of helping you do exactly this. And if you can't speak their language, these people are under NDAs. And even though they have a tolerance for loss, there's a certain amount of loss that is factored into their balance sheets, but they're not handing it out like candy. You have to study and show yourselves approved. Says we have to get ready soon for the Q&A in 6 minutes. All right. Half hour is good enough time. Absolutely. All right. So key takeaways, a collateralized debt obligation is a complex structured finance product that is backed by a pool of loans and other assets. These underlying assets serves as collateral if the loan goes into default. The tranches of CDOs indicate the level of risk in the underlying loans, with senior tranches having the lowest risk. CDOs backed by risky subprime mortgages were one of the causes of the financial crisis between 2007 and 2009. Though risky and not for all investors, CDOs are a viable tool for diversifying risk and creating more liquid capital for investment banks. Let's see. Jump on King. I'm trying to think, and I just want to make sure that I shared everything that I wanted. So that was all right. So this is a really good one if you want to take this one down as well. I think this one relates to most of it. 3 minutes. Means I know property assignment claim inventory. Yeah, I read that one, but I did see one that I didn't read. Deposit account. So a deposit account means a demand, a time, a savings, passbook, or similar account maintained with a bank. The term does not include investment property or accounts evidenced by instrument. So I guess it's saying that this one isn't a deposit account, but it is a securities account, which we determined earlier. See if that one is in this. No, it's not here. But yeah, it is a securities account. So let me see, still got a couple minutes. I'm just gonna do this. Oh yeah, we did read it under 8501. So let me just go here. I know usually we don't uh, read from Wiki, but let's go here, see what we got. A securities account, sometimes known as a brokerage account, is an account that holds financial assets such as securities on behalf of an investor with a bank, broker, or custodian. Investors and traders typically have a securities account with the broker or bank they use to buy and sell securities. Securities accounts can be of different types, such as share account, options account, margins account, or cash account, which ours will be a cash account. Securities accounts are typically treated as client funds, keeping them separate from the firm's fund. And this was something that we just had, we've been reading this whole night. It said that it's typically treated as client funds, which would be our funds, keeping them separate from the firm's funds. And I'm going to give you one more great jewel and show you this. And this is great. So it's corporate powers of association. As you can see, I'm always in all this stuff. The links are purple. But let me go down to the right one. So it's 87. All right. So it's pretty long, so I'm not going to read this the whole thing, but it's right in the beginning is the most important part. All right, so it's right here, and this is what it's called. So that's seventh. Um, to exercise by the board of directors or duly authorized officers and agents, subject to law, all such incidental powers as shall be necessary to carry on the business of banking by discounting and negotiating promissory notes. So I said that in the beginning too. It's called note discounting or negotiating promissory notes, drafts, bills of exchange, and other evidences of debt by receiving deposits. So remember, I said it's a deposit. They're going to deposit your note by buying or selling, exchanging coin and bullion, by loaning money on personal security, and by obtaining, issuing, and circulating notes according to the provisions of Title 62 of the revised statutes. So let me get to the part that's most important. All right, so all right, so it's actually right here. So the business of dealing in securities and stock by the association shall be limited to purchasing and selling such securities and stock without recourse. So that's what all contracts are. They're without recourse, solely upon the order and for the account of customers, and in no case for its own account. We just read that recently, but this is telling you right here, they're doing it wrong. They're keeping it for their own account. And it's supposed to be for our account. And the association shall not underwrite any issue of securities or stock, which we actually know that they do underwrite. If you've been in a situation of purchasing a vehicle, your contract has to go to underwriting before it's pretty much approved. All right, so I'm going to get back here, and then I don't know why I can't find it again, but I'm trying to find where it gets everybody to unmute. So I guess I have to do it manually because I'm not a Zoom expert. All right, so I think I got everyone to unmute.
Thank you so much. We really appreciate it, Ali.
Thank you.
You gave some great information, and I appreciate everyone for joining us tonight. We're about to enter into Q&A, and this is where we ask questions.
So, um, yeah, if anybody wants to start off and say what you learned or what you're not clear on, or that'd be great. I mean, we're here, you know. Or does that mean that let me see, can I just type? I just lost my mic. Yeah, Pat, if you want to type it, I'm gonna try to see how I can unmute everyone. Let me check on the phone. It says, how much is value of our security interest when transferred into our trades account? That information is actually listed on the contract. It'll tell you the security interest amount and everything. It's in the truth and lending box. Anyone else? Let's see. Yes. Let me see.
Hello.
Yes. Hey,
Oh,
Cassandra.
wow. Hi. Thank you so much. I have learned a lot tonight, and a lot of it is I'm gonna have to, re-listen to it, kind of like you said, kind of let it absorb in my brain. I'm kind of new to all this stuff. I'm going through a divorce, and my ex-husband he knows about trust. His parents are millionaires, and he's just trying to put me in the ground as far as debt. So I'm kind of in a situation where I got to figure things out, and I'm trying to learn as much as I can. I'm learning about like credit cards and building my credit. I have like a 750 right now. I got a bunch of credit cards that have 0% APR, and I don't really want to have to file for bankruptcy, but I'm trying to figure out like ways to discharge debt.
Mhm.
So, so I guess, I mean, there's just so much information out there. I heard about the 1099-C. But I've learned about this probably 10 years ago. Jordan Maxwell talked about, like how we're the straw man and like all this stuff. But now I feel like I have to figure things out because he's just has all this backing from his family. Meanwhile, me, like whatever debt I have, I just have to pay, and I just have to work, and I just have to, I'm just racking up all this debt. So I guess, like, do you have like any insight on somebody like me in my situation? I work, I have a full-time job, I have a 4-year-old son, but at this point I'm just in so much debt unnecessarily just because he just wants to litigate just to litigate. So
Mhm.
I don't know if you have any, gems or helpful tips where to start, like on, a smart way of like getting all this debt, but also being able to discharge it and still have good credit, without doing bankruptcy, if that's possible.
It depends. Are they in collections? Any of the account in collections?
No. So this is what, like, see, this is so shady. Like, my attorney, the whole legal system is so shady. So I've have probably close to $30,000 in debt with my attorney's office. And attorneys are super slimy, and I feel like they're not doing the best for me, and they're just literally like putting me on hold for like 2 minutes, 5 minutes, and then charging me for that. So, anyway, so it's like weird because they have their own trust account, right? And then I feel like they got upset with me, and they're like, "Oh, if you want to stick around with us, you're gonna have to pay us $20,000." And they gave me like 2 weeks to like figure it out. So I got a bunch of credit cards, and I got them in the mail. And that's why I was saying with the U.S. Bank credit card that it didn't even have an area to sign on the back. So,
Mm.
anyways, now I've transferred that debt in onto my personal side, whereas it was in their like trust, whatever it is. So now, because I knew that they were going to make me pay all this stuff, and so now I am accumulating all this debt, but I have like over $100,000 in credit available because I had really good credit, and I had all this debt with them for like 8 months that I just kept over in their office. But now it's transferring over to my credit, and now my credit's dropping to like 700s where it was 750 before.
Mm.
Yeah,
Um,
so I'm just trying to be strategic, I guess, still trying to like live my life. Like, I don't own a home. I only like was married for 6 years, but I just don't want him to like, be successful in ruining me financially, which he told me this divorce would do.
No, no.
yeah. Um, I was trying to answer you, but Joe,
Oh,
let's see.
sorry. Thank you.
Um, you're welcome. I'm trying to see the best advice I could give you on that. I definitely wouldn't file for bankruptcy. Um, let's see. The most you can do, I think, is try to reach out to them and try to get elevated to a senior person on the line. And like I said, I would probably wait before doing it. Like I said, really study this information, get down the definitions, tighten your head so that you can replace them in your mind and still understand what you're talking about. And then I would engage in a conversation with them and let them know about your credit that is sitting on their books. And you have to, like I said, use those terms, the terms you learned tonight: entitlement holder, um, financial asset. These are the words you want to speak that will, whoever's listening on the line will actually get you escalated to someone higher, a senior person that can talk with you and discuss you and possibly get your account settled.
And this is something I could do without an attorney, right? Like that's the main thing, is like, learning ourselves and like going into court if needed and not having an attorney.
Absolutely. The attorney actually won't do this for you.
Hmm.
Attorney will never do this for you.
And so I've been following you for a while on Facebook, but do you have like ebooks or like a one-on-one consultation, things like that available?
Oh, absolutely. Yeah, you can contact me for one-on-one. You can I guess inbox me.
Okay.
And this week I knew I was preparing for this, so I really don't have much booked for the rest of the week. So if you wanted to engage sometime this week would be perfect.
Awesome. Well, thank you so much. I know it took a lot of time, but I'm learning so much, and really these are gems like to open up my mind. I can't understand it all right now because it's like very, very complex, but
Mhm.
I feel like this is like the key to everything. So thank
Absolutely.
you so much. I appreciate you. I'll mute myself now. Thank you. So anybody else who has any questions, thank you so much.
You're very welcome.
Very welcome.
All right. I think who was it? Was it Joe or somebody had unmuted themselves? I think, was that you, Patrick? I think you had something. No. Does anyone else have it? Oh, Joe, I think you said your phone is not working. Does anyone else have any questions? I know Jude just got here, so I don't think he has any questions, unless I'm wrong. Has anyone else or it says you discuss about perfecting possession or control of security interests without establishing trust management with the bank as co-trustee. Um, if you dive into what I showed you on UCC is 8501 through 8511, all of those questions are there. You're kind of injecting trust management into it where it's not necessary. Those words were, I think it was in entitlement intermediary and you as entitlement holder. These are the words they're using. They're not really using trust terms, grantor, grantee, and beneficiary. They're not using those terms. You gotta, like I said, speak to them in the language that they're used to hearing. And is everybody else clear? How about you, Carla?
Yes, yes. Can you hear me?
Yes, I can.
Yes, thank you. This was very informational. Like it was said earlier, it's a lot of information to digest. So I'm still processing because a lot of this is very new to me. So um, I want to go back through the material and purchase the replay just so I can have it, so I can digest it better. Thank you.
Oh, you're very welcome. I'm trying to remember. I think some of you here did purchase the VIP section. If you can kind of let me know who they were. I mean, we do have them in our records, but for those who are online, I just wanted to say a few things. All right, so we got one, I think, because I think there was like 4 or 5 people, I think. Are any other of you on the line that did purchase the VIP? Thing for me. No, that would be negative. Like I said, I would just suggest going through this again, listen to it a couple more times, and I think you'll answer your own question. It's just like they don't need to open a new account. Like if you seen what I was saying, that once you sign that contract and credit is extended and you receive like a statement, like you're getting something in the mail every month, that is the securities account. There's no need to open up a new one unless like you're doing a new account or new credit or something like that, then you would open a new one. So there's, you know, I just think like literally just studying this information, you'll be able to get clarity and answer that question yourself. Um, and I'm just trying to help you guys out. I'm like I said, I know it was a couple more. I think some of you are on the thing. I would have to log into Eventbrite to get the exact names, but who else was here that had the VIP? Hello?
Wala tayo pero natumba ang nabali iyan ti. Ayun sa kung sino class ko.
I think somebody's hanging out with their family. Let me see. Oh, Cassandra. Yep, so I got two. So Cassandra was one, Jude was one. I don't know if I see her. Wait. So there's a few people that didn't make it. Um, all right. So was there any other questions anyone else had? As far as Patrick, like I said, the securities account will be held with the securities intermediary. I don't know exactly where they keep them at. Um, Sometimes you can actually find their prospectus. Some of them have been looked up where it'll say like auto receivables loan trust or something for Bank of America or something. And you could actually find exactly where they're being held at. It's work, you got to look for it. Um, but yeah, like if you're looking for an exact location for it, but that's not necessary if you were listening to the pretty much the instructions. It's just a matter of contacting the servicer or the intermediary and making your claim and stating your instructions of what you want them to do. And yes, you will also get a replay. We'll have to download it. It tends to be pretty slow because of the length of it. It's a couple hours long, so it does take a while to download. But I guess we'll try to get them out to everyone. At least within 7 days, we will have it all downloaded and be able to get them out to everyone. Um, so basically, Patrick, I mean, I'm not sure if you, I know some people was here and you were logged in, but maybe you were away or a little bit like that. I would definitely say all of that, like I said, all those questions definitely were addressed in the video. I would definitely watch the video. I spoke on it, and I think Cassandra, if you've been paying attention in the chat, she spoke about it, and she also reminded me to say without recourse. I believe that was her that said it. So I read through a few things where it was saying pay to the order of, and then I said restrictive endorsement, and there was another form of endorsement I was trying to think of. I couldn't remember. Um, But yeah, it shows you right there exactly how to buy it. And I was telling you how if you try this with a car lot, you may get tossed out of there without your car. So I did speak about it. I would just say just I would wait until you got the replay and just spend some time with it. Like I said, just have it playing in the background, listen to it, get used to hearing all the words and different things like that so that you know how to execute this. Thanks, Sarah. Really appreciate that. And if you guys can make sure, you can leave a review, uh, just just saying, your honest feelings, what you felt or what was enlightening, what did you learn new tonight? Things like that. Really appreciate it. Helps give feedback for me and Dolly as well. I'm trying to see them, wrecking my brain to see if there's any other jewel I can give you as a parting. Um, and like I said, I usually have so many windows open. I close a lot of them so I can have clarity when looking for something. Um, I mean, it's possible. Yeah, for VIP, I know Dolly spoke of earlier, there were some things she wanted to share with those in the VIP. She would be sharing the successful files because again, we kind of keep those close to us because sharing them and them getting around and people sharing the success files can be bad for us because whenever we figure out something, they create a brick wall. It's just like in the Matrix movie when they opened the door, it was all bricks behind it. So that's what tends to happen when you share successes. It's not that we don't have successes, not that's not what I'm saying. But again, I'm saying that something that you may do consistently and it's working, and you start to share it, the more people you share it with and they share it, that door will eventually close and it won't work like that anymore. Um, so yeah, I cannot find any of my other, like I said, I closed a ton of pages on my computer. So and I wanted to give you all the time. I know it was to end at 10 o'clock. Um, but anyone that has any question, I think Ogre, haven't heard from you the entire meeting. Or Cynthia. Right. It sounded like someone. Oh, that was Patrick. Um, okay, I've answered your question. All right, so hello? We really don't have templates. I haven't put any templates together for, like I said, it's just giving you the information. Most of the stuff can be done with a phone call. There's people who I've seen who have successively had their accounts closed. They've shared letters that we will no longer be pursuing this account. As of today, your account has been fulfilled or something like that. Um, so again, it's just a matter of just studying what was given to you. Sometimes we look at it as if this information isn't remedy. It actually is. It's just you have to know it. You have to study it. It's not. There's nothing else I can do to make this information work. The rest is on you. You got to kind of do the work at this point. Just study it relentlessly. Because as you can see, yeah, I read from some of the files from the slides, but most of this stuff is it's pretty much in my head verbatim. I can just speak this stuff. Um, I do have some. I had one I was actually just listening earlier, where I called in and got a hold of someone I wasn't supposed to be speaking to. And I remember Dolly was laughing when the lady found out I wasn't from a bank or a car dealer. She rushed off the phone and hung up on me and even asked how did I get to her, but somebody transferred me to her. So yes, I guess if you have purchased the VIP section, I would be willing to share that with you, let you listen and you can see how a call goes in the exchange and everything. Says the replays will be sent out via email. Again, we have to get it downloaded. Dolly has all your emails. We have all your emails on Eventbrite. We'll be mailing them out within 7 days. Make sure that we'll get them out to everyone. Well, Dolly actually put a lot of this together and gathered the information for us. So she was kind of speaking, but we're basically hosting from one account. So it's either one is speaking and one isn't.
But I will be, you know, since I've got some feedback from you, Patrick, and some others, we will be creating another event where I can give more detailed information of some of the successes that I've had with the discharging of debts and getting zero balances and getting titles to vehicles and doing different things. We also sue debt collectors. We do different things where we're evening the scale with the injustice that goes on with consumers every single day, and just us with the securitization that goes on. So I've been doing that for so long, and I do get resistance. So that's why when Ali mentions about the studying and becoming one with this information is very critical, because what happens is that they will try to throw you off your square. And if you are not comfortable with the language and how it's communicated and how you're communicating, it could hinder you. So the more you become one with the words and then putting it on paper is very powerful. It doesn't have to be some elaborate legalese on paperwork. You just have to use the laws that are in place in their own records, what we've reviewed tonight, and a lot of it will have remedy. So we've done many, I've done many discharges of debts, helping people with that. So we're Ali and I, when we get off tonight, we're going to discuss that to see how we're going to schedule or do another event. If you guys are interested in learning more about that. I'm sorry. Yes. I think I heard someone say something. Okay, so yeah, so I would be more than happy to share more information about the things that I've done over the years and how it's impacted people's lives. But at the end of the day, even if we share documents with you, if you don't know how to enforce these documents and what your rights are according to their laws, then you will be lost and then you'll be codependent. So the goal here is to learn and be dependent on your own so you can teach others and help your family members and friends and people close to you. So that's how it started. We started talking about myself in the last recession, like during 2008. That time, during that time frame was when, you know, because so many people were going in foreclosure, there was so many subprime lending. I was I was in the mortgage business, and then I felt responsible for some of the clients that I put into these mortgages. Now, someone's talking.
It's gotta mute 'em.
Yeah, you gotta mute yourself, Patrick. Okay, thank you. So yeah, so that's what I'll be more than happy to share. So I haven't put anything together yet. These are some of the things that I've experienced from being a mortgage person and helping people that were losing their properties and people that are getting their vehicles repossessed, and how unlawful they are and how to use those steps to, and the things that we reviewed today, and put that into practice. And that takes time, but I'm going to definitely recommend and encourage that you guys go over the replay and learn this language and make it like comfortable to regurgitate, so that when you get it and become one with it, then you start learning how to apply that. Now, when you go in, all roads lead to court, so you're gonna have to face, you may have to face a judge or some attorneys, and you're gonna have to learn how to protect yourself in all levels. But thank you so much, guys. We appreciate you guys being here tonight. It's a beautiful thing. We just started something new. We said, well, let's start teaching more and more people. And you know, we're here to help. And if you guys have any questions, feel free to contact us. We're gonna get these replay out to you as soon as we can. And for the VIP people, I guess you guys stay behind. I don't know, should we set up a new link, Ali? What do you think?
Yes, actually what we're gonna do, because as we stated earlier, we had a few complications. We lost some information that we worked on, like what was about a week, I think we worked on. So we don't want you to feel that we rush something together, and we want to get together with you guys at a different time, but we're gonna have some handouts for you as well.
Absolutely, absolutely, because we want to have this going. We want to have uh, a group of people that, you know, and I know we're all on different levels, that we can help one another. I'm not sure we're going to start a, you know, a Facebook group. We don't want to be like other people. We're just trying to be like, kind of like tonight, a small concentrated group that we can work together and see results, because we want to be able to start taking action on the things that we reviewed tonight. But that's pretty much it. So what are we gonna do with the VIP, Ali? Are we gonna contact them after? Yeah, we do. I have Telegram, Patrick. That's a good one. Maybe we do a Telegram group. And you're right, we could do the restriction of files. We could do that. We haven't actually put anything together like that yet, but since you guys are mentioning that, we might as well. So we'll keep you posted. Everyone that joined tonight will be on our email, where you'll get emails from us, and any upcoming events, if you're interested, you'll be the first ones to get information on that. Anything else you want to add, Ali?
No, I guess that's it.
Okay, God bless you too. Thank you so much. Without the Most High. And we also use, I use scriptures on paperwork, and I'll be more than happy to share how I use the Bible in a lot of in my paperwork. And thank you so much.
Thank you guys, appreciate it.
Yes.
Thanks for joining us, guys.
¿Yo o no yo hoy?
Sí.
¿Sí? ¿Tú?
Sí.
Trabajo.